Good evening, everybody. This is Jeff Scott, and I'm doing this. One, I'm using my microphone on my computer, and two, I've toned down resolution so it doesn't become impossible to read, so it may not be as clear as it is historically, since I don't have that computer as I'm on the road. And since I'm on the road, I'm using the internal microphone. So it may not be as clear as optimally would like it to be. It is 9 o'clock, as you can see, on Sunday, July 14th. And I guess we'll take a quick look at the futures. The important thing tonight is likely going to be the impact of some China numbers that are coming out. And so these are actually better than they were at the end of the day on Friday, because the market sold off a little bit after hours. A little bit is the appropriate word, especially after the great week we had. So I'll start with my PowerPoint. I may make this briefer tonight, which won't upset anybody, I'm sure. So as you can see, I've titled this, Will China be the Catalyst for a Correction? I think that a lot of people are expecting a correction. We're due a correction. We talked about that till we're blue in the face. We'll see if we get it this week. Obviously, for most folks, last week was phenomenal. The session's for educational purposes only. Any recommendations are in the spirit of education, not investment advice. I'm a doctor, not a broker. Most physicians lose money with their investments, and I'm not affiliated with any software vendors or trading company. Anything I demonstrate are tools that I purchased myself. I have a lot of things on my desktop, so when I'm smart and remember, I hide it so you don't have to wonder how anybody could buy so much software. But what I really need is a real-time trading platform, of which I use two, TradeStation and Thinkorswim. I need an analysis program, of which none's better than HGSI, which we'll use predominantly tonight. I'll just show you results from EdgeRater, which I use for market timing and also for back testing. And then I won't have time today for seasonal analysis, but I use Magenta is my favorite. And then I'm a close follower of Ian Woodward and Ron Brown at Woodward and Brown Investing. And they have a number of products, both free and with small fees. One thing that Ian said the first time I met him that really resonated with me is that although I don't necessarily agree when he says he's not a guru, he really stressed that we have to be our own gurus. And Ian, who is here on the left, and Ron have been big influences on my style. And you could see here some websites and books from people that I think very highly of. Alexander Elder, William O'Neill, Gil Morales, and Chris Kacher used to work for O'Neill. Bigelow is the candlestick guru that I like, and Van Tharp is position sizing and money management, which may be more important than picking stocks or market direction. The most important thing that you have to decide as you look at the market each day in the next week and beyond is really where are we at, because we have been living at this place here, which is the top. And every time I think we're rolling over, we take another leg up. And then we pull back 3 to 5%, we take another leg up. We are long in the tooth in this rally, as everybody knows, and it's great to have a lot of long positions. You could probably live through a 3 to 5% correction, but a 20% correction, 15% correction, growth stocks correct probably 50% more, will seriously make your portfolio have pain. The key is when, and I'm overly long right now. It was great for me last week, but I'm aware of it. I won't say I'm nervous, but we have to know where we are. And again, we're living at this point here where either continues to go up or we start to get to where it's rollover time. Don't fight the trend. And the reason why I spend so much time on the market dynamics is we could pick the best 10 stocks in the world tonight. And if the market opens down 250 points because the Chinese came in with a GDP of 5.8%, which is less than 7%, then nothing really matters. Everything will be down. So In an uptrend, I want to buy pullbacks, and you'll notice from when I talk, that's my style. Look for strong stocks with great fundamentals that are in a rising trend line and pull back to support. That's when I want to jump, and I look for signals of momentum at that point to get me involved. If the market is bearish, I want to short retracements, and it's really hard for me to understand where I could go long here, and if I don't wait too many times, actually make money. It's impossible. And we're not in a trending market right. Well, we're not in a horizontal market right now. We're in a trending market. So, but you will get periods of time when you just trade the range and you short at the top and go long at the bottom. But we have been in a long trend, and it's been great if you've been bullish. You just want to get out before all does. I owe a lot to highgrowthstock.com. Actually, probably mutually owe each other, as I've spent a lot of time as an individual user trying to help people, and they've helped me a lot over the years. The website is there. On the website are some free weekly reports from Ron Brown. Actually, it's probably changed a little bit on the URL, and then also free data. So very quickly, I'm going to jump into the website. So it's not that hard to find, highgrowthstock.com, and I'm going to make it a little bit bigger here so you might actually have a chance to even read it. Just a couple of key things about the website. Free trial, they don't even ask for the credit card for 30 days. You can look up under investing strategies and my name, Dr. Jeffrey Scott, and you could see sometimes I'll post a message, but usually I have my weekly webinars that are in here going back quite some time. If you don't go back far enough here, if you go directly to YouTube, you'll find that they go a lot longer. Under Woodward and Brown, you have two great things here. You got Ron Brown posts, so he'll post usually much shorter movies than I did. He did one on the 13th, which I guess is today, about how to find great stock candidates with a group inclusion report in Smartgroups, something that I like to do as well. And then Ian has his blog, which one of the things that we've learned over time is he does it a lot at market turns. And a lot of the mumbo jumbo will scare you off a little bit if you're a newbie. But once you figure out what the mumbo jumbo means, he's just an incredibly brilliant technician and equally wonderful teacher. So futures not doing anything yet as we wait for the Chinese gross domestic product. So first thing I like to do is figure out what the market is doing or how the market did last week. And I like to quickly look into TradeStation for a couple of things. Let's go into this group. And I use a lot of the elder tools in my trading, and I also do it for my market analysis. And I specifically look at things such as MACD divergence. I look at force, and I look also at the impulse indicator, which paints the bars green, blue, and red, and then the location of that bar within the auto envelope. As you could see, a couple of things from this chart. We have broken outside the envelope, and I could say that when that happens, that increases the risk, and it certainly does. But if one goes back to May, we were outside that envelope for almost the entire month of May, so I'm not going to say just because we're outside the envelope, we're going to turn around. I'm just going to say that that increases our risk. You can see green price bars in the daily, weekly, and monthly, confirming to me that this is a bullish market and that I can either hold or buy, but I usually don't sell on a green price bar. And you can see how red going below the auto envelope, turning to blue, gave us an early buy signal after the recent pullback. And one thing about Elder and Kerry, his partner in crime, they actually on their website posted a buy notice on when that market turned. I look at MACD divergence, and I want to see that on the histogram here, it's taken out the high of the prior high on the histogram. We have not yet taken out the high on the lines. So that's something I want to take a look at and watch. So NASDAQ for the most part bullish. The Dow, no reason to belabor the points here. Green across. Again, the MACD histogram taking out the prior high, which is important as we look for divergences. I'd like to see the lines catch up to it. One thing you notice down here is I actually plot the high jump, which we'll talk about later on charts. And we're at 89%, so we're not quite at the highest high on the Dow. On the NASDAQ, you may have noticed, I think we were at 100%. Look at that real quickly. Maybe I shouldn't push my luck. Come on. You can see the NASDAQ. The NASDAQ's at the highest, not just the highest high in quite some time, but it's the most extended it's been, and my look-back period is at least a year on this. If we look at the S&P 500, we should see more of the same, meaning green at the top of the auto envelope, green above the auto envelope, bars on the histogram making a new high compared to the previous high, so no divergence is seen there, and green on the weekly and the monthly, and at 89% on the high jump. So far I would say bullish, and we all know that, but again, there's some big news lurking out there. If we look at performance last week, boy, I hope you made money last week. This probably was the strongest week that I can remember, except for maybe the massive rebound off the lows in March of 2009. Then I'd have to go back years before then, and I wasn't as into the market back then. So if you look at just the S&P 500, it was up 2.96%. So I guess that means if, to be par with the S&P 500, you got to be up around 3%. Probably a lot of us, I won't say us here, we're not up over 3% last week, but it was a great week. If you just bought the stocks that made up the HGS 100, which 96 made my price of 7.5 and 150,000 share volume screen, you would have been up a little bit over 3%. That is a big week. The IBD 50, which is a narrower list of 50 stocks of the top 50, not the top 100, was up 4.56%. I was pretty surprised on some of my holdings because, probably mostly because I undid most of my shorts. I was up 4.93%, but probably more shocking was the 84% were up. Now, a couple other things to look at here. GIF All-Stars. Remember I mentioned that Ron was going to talked about on his movie today about using the Smartgroups and the GIF function. I do that every day, and I look at the top 30 stocks, and they were up 5% for the week with only 2 losers. They typically outperform, and we'll conclude with that at the end of this movie this evening. Best of Woodward and Brown is a shortcut in the Smartgroups that looks sort of does its own group inclusion filter of the bullish Smartgroups and picks the best 10 stocks, and as you can see, 7-3 in favor, up 4.88%. Green candle lows. In a rising market, green candle lows are great because in a rising market, these are stocks that have pulled back and had a reversal, at least a one-day reversal, up 4.34%. Red candle highs, to me, are more important in a bearish market of retracements of stocks that are shorting candidates. In a bullish market, red candle highs don't work because some of the best stocks in a strong bull are extended stocks and leaders. Interesting things, a lot of my bearish searches were up at the top. Trending bears, breakdown bears, even stocks breaking down from MarketWatch. So this was a pretty broad-based rally that even included some of the beaten down stocks that were underperforming. Now we will come back and look from my buy watch, which was about the same as S&P 500, 51 to 6 positive, up 2.84%. Had a couple people comment on my Santoris call. We'll take a look at the winners and losers from that buy list also later on. So what I like to do at this point is like to jump into HGSI. And the way I like to start is I like to go into, we'll go into the warehouse and we'll go down to, well, let's take a look at last week to start. So I've got all my last weeks in the archive weekly group. So last week was 7/13. And let's take a look at that buy watch. So I'm looking here, 5-day performance. That's pretty good because that's who did the calls on Sunday. And Santoris, which was, very bullish on last week, great week, up 16%. Now, why was I bullish about it? I was bullish, and you'll see some others tonight that have a similar pattern. I just loved this picture here where it had pulled back and based on its 50-day moving average. And I said I was looking for something to tell me to buy. So I got on the open on Monday. I couldn't have predicted it better, a buyable gap up. And you could see huge volume came in Monday. They had a kahuna as well. And that was my day to get in. Now, truth be told, I already owned the stock, but it was an add to day for me. And you could see little pullback on, minimal pullback on Tuesday. Gap, it traded up and then pulled back and closed a little bit below where it closed the prior day, and then traded down and closed up a little bit on Wednesday, and then took off again on Thursday and Friday. So this is what I like to see, which is sort of a squeeze of major indices and a pullback to what had been, as you see here, the 50-day has been a good time to look at buying the stock in the past. So it was pretty clear to me that we were setting up for a good buy point. You look at Celgene, which is one of the things we talk about a lot here, and frankly, I talk a lot about biotech, and biotech had a great week. Celgene was up for the 5 days, 9.9%. Celdex, this is one that pulled back some and maybe a buy this week. We'll look at that later on. Gilead was up 7.5%. NPS Pharmaceuticals was up 6.8%. So biotech had a great week. In fact, when you have that kind of a performance for a week, very few things lost money, and they're listed down here. So it was a great week, and we made some good calls, and we'll see what we can do this week as we look at the market. So now I'm going to close that up, and we're now done with that, and go down to Woodward & Brown user groups. Let's go into Major Markets Plus, and let's go to my top-down analysis. This is all technical. It's all price and volume based. Some group I believe in it as well, but that's still based upon price and volume. And it does, because it uses the 13-day force, it does take into account at least 2 weeks or 15 days, so 3 weeks of trading. So if we look at this, what do we see? We see that a lot of big movers in the week. Silver and gold, junk off the bottom maybe, but they had a big week. U.S. gasoline, we talked about refiners. They didn't really do much this past week, but you can see gasoline was up 7.7%. What didn't do well? Probably very surprising, or excuse me, not very surprising. The VIX continues to meander back down towards that 11, 12 range. The dollar was down 2% for the week, although it did make a little bit of improvement on Friday. Treasury bonds for the week were up 1.4%. All the indices seem to do well. So let's take a look at them. We'll start big with the S&P 500, which was up 3% here to my other analysis. So let me shut down the earnings because there are no earnings here. And just to orient everybody, I have a number of momentum indicators on the top. bongos is accumulation and distribution. Force is here. Since you don't have volume on the S&P 500, there's really no way to measure force. This is a high jump, which is the sum of the distance between closing price and the 200, closing price of the 50 in blue, and closing price in the 17-day, simple, added together and plotted, and the absolute number is irrelevant, but you look at how you compare in the past. For example, when you get the highest high, you usually get a time when the market's going to correct. I use that in many different uses of the high jump, but it is something that I always look for before I buy a stock to get an idea of how extended it is. So I've made this before, but we had on the S&P 500 from the middle of from September down to the middle of November, we had an 8.9% correction in 43 trading days. Since that time, we've had a series of small corrections, 3.4%, 3.0%, 3.8%, and then we had the largest of those corrections, which was 5.3% in 10 trading days. And actually, let me redo that because I may not have picked up that bottom. So let's take a quick look here. One of the neat things about this program is you can put your little line in here. And so the maximum dot was 7.6% in 22 days. So as we continue that, so 7.6 was the lowest. And since that one, we've now gone up 7.5% in the last 13. So we've now started to take out prior highs, and we've recovered from that pullback. So that was the biggest one we got. I just don't believe that that's the last one we're going to get. So that's the S&P 500, and I think we're not going to spend a whole lot of time on any of these because it's the same story. High jump, getting close to the top, not at the top. Either at recent highs since this pullback in November, and actually going back for many of these all-time highs, and really powerful up move here. Certainly at some point that's going to stop, but up too early. The NASDAQ you could see moving up, breaking out to new recent highs. It'll take forever, if ever, to break the 2,000 highs. And you could see everything's green in the momentum indicators. It had a pocket pivot on Thursday on an index. That's a pretty powerful thing. If we look at the Dow Jones, that 30 stocks that we worry so much about, a little bit less exuberant than the NASDAQ and some of the smaller stocks. And you could see here the same pattern though, pullback, recovery highs, doji on Friday, everything was green. And Friday was a pretty flat day for the market, if I remember correctly. In fact, the Dow was up 3.3, the S&P 5, and the NASDAQ was up 21. The NASDAQ and before that the Russell were the big leaders. Let's take a look at the Russell. And you could see shallower pullback and a nice move as well. All the markets are very bullish looking, all of them with the high jump bar getting to be in the 90s and 100% range, all of which at a point when you might expect a pullback. But one thing that I've learned over the years is that they have a tendency to get even more extended top into the bottom, and they don't necessarily listen to what I want them to do or think they should do. S&P 1500, an amalgamation of the 600 small, the 400 mids, and the 500 large, looks the same as everything else. Why do people get excited about major moving averages? Because they work. And in fact, let's go back to that S&P 500 because that one came into play. And you could see that there was a trend line here. And when we broke that trend line and went through the 50-day moving average, a lot of people would have thought that was time to get out of the market. What's interesting is that trend line, if you extend that trend line out, we broke above that trend line and that's extremely bullish because this has been great support with 1, 2, almost, we won't count, 3, 4, 5 touches, and it got through on its first real try, which is a great thing. Very bullish, but extended. Going sideways for a couple weeks, a couple percent pullback, not necessarily bad things for the market. Now, those who've been on my calls before, I use EdgeRater sometimes to help me understand how pullback or how extended we are. This is extended, folks. 94% of the stocks are above the midline of the Bollinger Band. Very bullish. 18% above the Bollinger Bands. 27% in the ninth, between 90% and 100% of the width. 25% between 80 and 90. 25 and 27 is 52. And 17 or 18 takes me up to 70%. So that means 70% of stocks are bouncing off or near the top of their Bollinger Band. This is time, again, stretching market, expecting a pullback, but going sideways will take a lot of this exuberance out as well, so you don't have to get a pullback. So I think enough said, market very strong, but certainly not without risk. I like to look at the industries as part of top-down investing, and you can see there's 146 groups. Now, if you look over multiple weeks, sort of by combo rank, biotech has been a leader. I don't really care what was working 3 weeks ago. I want to know what's working now. So I look at the force. 146 becomes 87. So we got 87 minus this one, which is an index. So 86 pointing up and only a couple pointing down. Aluminum, steel, coal, although coal had some upgrades during the week. Really been tough places to be. A lot of the REITs got killed as interest rates went up, but interest rates are starting to come down. Managed care took a hit. Not sure how much of that was related to a delay in the mandate on employers. But most of the groups are up, and that's where we're going to spend our time. So I like to go through many of these, and you can certainly duplicate my analysis on your own. Biotech, right-click, change to index group. So let's look at some of these companies, several on my list. Alexion, rumors of a takeout by Roche caused the stock to go crazy on on Friday. I never know how to play these. If I'm in them, I thank my lucky stars. And if I'm not, I don't do a whole lot about it. $22 billion market cap at this price, and they have one drug with a very limited number of patients. But that drug is a great story, and I would have thought something like Biogen would be a better takeout for these guys because of Biogen's historical success with orphan, small patient number products. Now, were there any reasons to be interested in this stock before the buyout? Sure, you had 4 kahunas over the last couple of weeks, all to the upside. You had you had a mobile breakout from a squeeze on Wednesday with a kahuna. That would have been a buy point. As I said, right now I don't know how to chase these things. So Regeneron's been one we talk a lot about on this board. Regeneron had pulled back hard with biotech. About 2 weeks ago I said biotech starting to move once there was the potential takeover of Onyx by Amgen. The whole sector woke up. Look at any of the stocks going back to that date. Regeneron's got some great products, probably about the same size as Alexion, $26 billion. A lot of their drugs are licensed to different pharmas. That may make it more difficult for them to be a takeout, but this is one that I also would expect to hear takeout stories coming into. And something's going on here. You had a DI crossover, a gap up on Friday. and multiple kahunas in a row, a very bullish looking pattern, but a very expensive stock. Analin Pharmaceuticals, don't know this company well. Something's obviously happening here. You could see the increased volume compared to the last several months in a series of viable gap ups with a couple at the end of the week, obviously very extended. You might, you don't know, does this mean that people are expecting this to be taken over? Is there some positive data about to be released? That's why you do your own research. Yeah, I pounded the table on this one several times. I'm going to pound the table again. Long-term leader in HIV. They should get a lot of credit for changing HIV from the killer that AIDS was when I was in medical school and residency in the 80s to the chronic disease that it is today. They are on the verge of becoming a market leader for hepatitis C, and they're now also building an oncology portfolio. Great company, certainly a leading stock. Got hurt with the rest of biotech, multiple pocket pivots last week. This is one that I'd be very bullish on. Celgene, I've been a perma bull on this one. I think this is one where Gil and I don't always agree. I've been long this for quite some time. Yeah, I probably could have traded the stock and made more money, but I like this stock. I still like the stock. Now, to be honest, I think the stock is expensive. My price target was about $140. They had some great news come out after market closed Wednesday night before it opened again on Thursday morning, and you could see the market had a big move on Thursday. And what I did is simple. I said I bought puts at 130 out about 6 weeks, because if there's a summer swoon, some of these leaders are going to fall hard, and I financed those puts by selling calls at $150. If the stock runs up tomorrow to 150 and I get called away, I'll be happier than if I had sold it at 135. And if the stock tanks over the next couple of days, because the market tanks, I protected my profits with those puts. So, and the nice thing is they kind of covered each other. BioMarin, they've got a cancer drug called a PARP inhibitor that's very hot, but it's early in development. Here is when we should have bought it, back on this 200. Probably giving us another nice signal here with a kahuna breaking through the 50-day moving average. These are stocks that are risky because they don't make a lot of money, although this one does have revenue. But the exciting thing here is the future. A $9 billion company, probably also in that candidate of interesting. Pharmacyclics, this is another one of our favorites on this session, and I've talked about this for and it doesn't look that exciting maybe in here, but it's had a run up from basically $15 up to $110, and this is going back 18 months. They have a drug for leukemia that's they submitted for approval this past week, and that's what made it take off again. Again, another company that I would put in my takeover pile of candidates. Now, $7.8 billion with a potential blockbuster drug in leukemia, a compelling story. Do your homework. There's a theme here. Takeover interest is high. The sector is strong. In Ariad, I guess one of my bad calls is I came on the board in mid-December. This is the day the drug company got their drug approved. Kind of a funny-looking candle on the day you got your drug approved. And the approval came with what's called a black box warning that pointed out potential toxicity that the street was not expecting, and the stock sold off. I came out and said I thought it was a buy, and I've been wrong until now. Still wrong, frankly. That's 7 months of tying up your money. And I know George Roberts of HGSI has been closely following this because he keeps sending me messages about it. It broke out on Friday. Is it breaking out on potential takeover opportunities? Yeah, I think so. It's a $3.9 billion. They have probably the best-in-class drug for chronic myelogenous leukemia. The black box warning, and I'm a cancer doctor, is not very bothersome. And in fact, it's less bothersome than its competition. Unlike a lot of these companies, Pharmacyclics has partnered with J&J. Regeneron has multiple different partners, a lot of Sanofi, and Sanofi's got a call option on the company. Ariad owns the rights to the drug in the U.S. and international, which means that they could get a big amount of money coming in for international rights, or somebody might take them out because they get a great drug that's not already licensed to somebody else. X Pharmaceuticals, a hepatitis C company with a cystic fibrosis combination that seems to reverse some of the lung damage. And you could see when that news came out, stock took off again, everything's green. Beautiful story. The problem with a lot of these companies, here's a company with a market cap of $20 billion. It has revenue, but doesn't make much money right now. So a lot of these are buyer beware, but these are great stories, and that gets us down to the index. And I don't usually go below the index, but let me see if there's anything here that jumps out that I have to bring up and show you. Yeah, I want to talk about Celldex. Preclinical company, meaning they don't make money because their product is in clinical trial. They have partnered with a number of other companies as licensed products to bring to market. A flag formation on Friday, perhaps breaking out. Everything is green. I don't know what the impetus. You can see it's a cheap stock, 1.6 billion market cap. I bought a little bit off the 50-day moving average in the past. It's clearly extended, but it's had a big move up, and you might expect with a flag or a pennant formation to get up to 23 or 24, but it is extended. I don't know what the impetus of that has been, and perhaps it's been taken up a little bit in the takeout wave. So enough of biotech. I'm tired of that one. Semiconductors, that's kind of strange. And I think a lot of it was driven by the first. Spreadtrum is they make components for low-cost cell phones. They had a buyout offer from a Chinese company. Here was the first buyout offer. The stock went sideways. They gave Morgan Stanley, I think, so much time to find another acquirer, and that original Chinese company upped their bid, and they accepted it. So no worries about this one. It's gone. ARM Holdings, the mobile leaders, clobbered. A lot of talk about Intel improving in this space. Bible gap up below the 50 or 200 to above the 200, probably less important to me. But here's a stock that's pulled back. It's still below the 50. DI crossover, pocket pivots, huge volume, probably worth watching, and it's got growth. In fact, sometimes to confirm, I'll go into MarketSmith, ARMH, and I can't always spell. And you could see 35% growth, almost $1, big multiple. It's expensive stock that sold off. First Solar, obviously a solar company, has had a great year in many different ways. I know my friend George Lee he's done very well with the stock this year. Had a pocket pivot on Friday, a kahuna on Thursday, a DI crossover. Looks kind of interesting right here, and one you might want to pay attention to. Anything else in here that Cree company, it's certainly a leader, extended but not to the point where it's up on the top. Everything is green. It's got great earnings per share growth. I mean, it will continue to lead until it doesn't anymore. There's a lot of momentum behind that stock. The next one, pharmaceutical index. Different players here. AbbVie is sort of in between biotech. They were spun off of Abbott, and they have Enbrel as one of their products. They're the drug and biotech Abbott portfolio. They pay about a 4% dividend, if I remember correctly, 3.6. Now the stock's gone up. And they had a nice rounded bottom here, broke above the 50 on a kahuna on Friday. It's an exciting looking stock from a growth perspective and from a dividend. Pfizer in a pullback has broken above the 50-day moving average. Not a lot of earnings per share growth, but pays a 3.3% dividend. Sort of a nice effect. I think the market's in trouble. Vivus and Arena, ARNA, sort of Bobsey twins. They both get approvals for obesity, and they both have not made a difference in the stock. You would think that a company that gets a drug approval for obesity, and all you got to do is go to the mall, and there's a lot of need for an obesity pill. There's a lot of fear in the physician community because of some side effects of other drugs in the past for obesity. But, you know, is something happening here? You've had a DI crossover. You broke above a squeeze with the 50, the 200, the 17, the 8-day exponential all coming together, volume coming into the stock. Something's going on here. Maybe this is one that you might want to watch closely. It doesn't pay a dividend, but it may be setting itself up for a new phase. J&J, a lot cleaner looking chart than Pfizer's been through its pullback, running again, and this one also pays a nice dividend, dropped now to 2.9% as the price went up. So big pharma, less earnings growth than the others that I showed you. Let's look at Questcor and Santeris. Let's look at probably Forbes. And there's a lot of interest. Here is a stock that punishes. You'll want to love it because it's had a nice move up here, a couple of pocket pivots, everything is green. It makes money in the pharma segment, and if you it's had a nice run up here, but it's been smacked around so many times, and usually it's because a sell-side newsletter comes out and says horrible things about the company. They did a recent acquisition, which is what's got it off the bottom here, and acquisition of a product license. This is one that's growth, but you buy that one at your own risk. Santoris, is it too late? I don't think so. I still have my shares, so that means it's going down probably. Multiple is high, the growth rate is higher. If you take that multiple down to 36 times $1.30, still got a $43 stock. It's $25 now, so you could get multiple contraction, which why would you get that when the earnings are so strong and still the discount to the coast? Your growth rate would still be a big, the PE be a big growth discount to the growth rate. So yeah, I still like Santoris. It's starting to get extended. I'd still be long here. Agerian, don't know anything about this. They might be one of those lipid companies. Pull back here would have been a nice buy point. Looks like this one is running, doesn't make money, doesn't have any revenue, 2.2 billion market cap. These are the ones that you start to are either doing this. This one's got a new lipid drug, which is the excitement there. So it's being driven by clinical trial excitement, most likely. Another good growing drug company. Again, the J&Js and Pfizer's, Bristol Myers and Abbott's pay a nice dividend and have no growth. This is a growth stock that doesn't pay a dividend, grows by acquisitions. Recently, this was when they announced an acquisition of Bausch & Lomb's. So even though they were the acquirer, they had a huge move up, and they're moving up again. That's enough there. Back. Automobile manufacturers, you know, Tesla has been the driver here. And when did you get on this one again? It's a flagpole, certainly going up. It's not going up on earnings. It's a $15 billion stock or company, a lot of excitement. All right, so I'm getting a message that my audio was lost. Hopefully the audio is coming back. All right, hopefully the audio is working. I apologize if not. Let me turn off my trade station that eats up a ton of bandwidth here. All right, I think I'm back. Apologize for that. I was talking about automobile manufacturers, and I mentioned that I thought much of this was driven by Tesla, and Tesla's excitement is not necessarily earnings per share. There's a lot of excitement in the stock. Perhaps it's because it's the first successful electric car company, perhaps because of its CEO, who's pretty flamboyant, and a lot of people like him. Certainly a leader, and this will pull the sector up. You compare this to something like Ford, which actually has earnings. Maybe you want to get a little more excited about this one. Nice to buy these off the 50-day moving average when you can. Getting extended, but in a nice run. Just a beautiful move. And Ford makes money. I'm not sure where Ford's going on the money departments. Let's see here. It's growing its earnings, and I like to see that 1 year out have higher earnings per share growth than a multiple. So perhaps still a nice value. All right. Let's see what else we can find here. Home builders, are they back? I bought into some last week. Huge gains for the week. Lennar, they all look the same. They all pull back hard. Let's look at how hard this thing pulled back. From its top here to its bottom, dropped 25% in 33 days. It's had a recovery at the high of 14% in 4 days, 2 kahunas, a pocket pivot, a DI crossover. And maybe it's too early. They obviously fell with concerns about higher interest rates, less of a problem. This one is D.H. Horton. It got above the 200-day with its recovery. It's beat its earnings per share the last several times. I think it's the first one up to report earnings. So home building might be an interesting place. So that's how I do my top-down investing. Refiners making the way up. We did talk about them last week. To number 13. I guess that's not a big surprise with the gasoline being up so much this week. Now, the problem I have with these, I won't say we're pretty beat, and I'd rather see these things get above the 200-day moving average and not bounce off of it and go back down and fail. Pocket pivot, big update candle on Friday, huge volume. Probably time to watch these things. Some of their dividends have gotten nice if they pulled back 2.2% on Valero. Here is Tesoro, similar pattern except it's moved up closer to its 50. Pocket pivot, Kahuna on Thursday, and it pays a 1.4%. All right, I'm starting to get tired, so let's go back and let's conclude with some GIF work. So I haven't watched Ron's video yet, but I know that this week he talks about how he uses the group inclusion filter. Let me show you how I use it, probably very similar. So the group inclusion filter, let me get out of this and go into my designer. The group inclusion filter is a tool that allows me to see which stocks are in more of these lists than others. If these lists are predominantly bullish lists, if I'm in 8 of these lists out of 10 or 12 I look at, I'm probably a pretty bullish stock. So I do tools, group inclusion report. It's 10:05. Unclick that, so I want to clear it. I go to Smartgroups, and I like to look at 7 or 8 of these. I like Bible gap ups and pocket pivots and Morales and Catcher. In Woodward and Brown user groups, I like best criteria, Berg 240, growth, HGS 100 leaders, quarterly EPS, and strong EPS near 52-week high, and stocks and groups moving to the upside. We're going to make a group from this report. Now let's look at the top 10 or 12. We'll see how many come up. We're going to call it AAA, Web. There's our news. Chinese economy grew. XXX%, that's not anything. Well, it looks like, we'll see what the S&P futures do. Web, GIF, 12, and this is 7.14.13. Let's hit OK. So it's looking at each of these groups, looking at the stocks in these groups, and it's going to tell me which stocks make most of the groups. Winnebago, Santeris, Yandex, Questcor, Priceline, Regeneron, Cons, Prestige Holdings. These are the top stocks as far as the number of groups that they ended up in. So we can then go into the designer and find what we just made. And let's just close by looking at these, and then I'll put up my buy list for the night and say goodbye. You'll see that many of these we've already looked at. Analysis. Regeneron, breaking out after pulling back, and a very good performer for many of us. Biotech. Gilead, my favorites, perhaps in the biotech. Priceline, what can you say? I mean, David said it all. Why would I ever sell this, or why did he sell it? It's expensive stock, and a lot of people want to take their profits. It still is growing nicely. Multiple pocket pivots last week, running again. If it breaks through 900, it goes to 1,000. It's broken through 900. What a beautiful stock. LinkedIn, it's had its pullback. Looks like it's running again. One, certainly has been a leader. Looks like it's going to lead again. Yandex NV, I think this is a Russian internet company, Russia. And I looked at this. I was nervous about the Russian side. It's running multiple pocket pivots. Everything is green. It makes money. Where we already talked about, the one that's news-driven at times. Santeris, the one I love. Cons, lower left, upper right. If home building is good, someone's got to put all the washing machines and everything else in it, and that's what they sell. It's interesting with the demise of Circuit City, Best Buy, these guys are still working. I think it's because they're heavy in appliances, and also I think it's some furniture. Lower left, upper right, certainly a leader. Corporation, this is a leisure product group, so they're engines and turbines for boats and bowling and billiards. Everything is green, pulled back, looks like it's running again at a bullish engulfing candle on Friday. It makes money. And A biotech that's mostly about licenses as far as I could tell, which means they've licensed products to others that are spending the money to develop them and sell them. And then they get a percentage of royalties when they sell them, and they get money when they meet certain milestones. And you can see what a beautiful chart going sideways, which is a nice pause to refresh. Great numbers here. One might expect further movement there. Prestige Brand Holdings had a Bible gap up last week on Monday or Tuesday, went sideways the next 3 days. This little trick, all these are leading stocks. Here's Winnebago. We've talked about that a lot over the last couple of weeks. It and Thor Industries, great earnings per share growth. Going sideways here until it runs again. All right, all of those are stocks, nice patterns. You can see 5 to 8% move on these. Yeah, should be in. Look at the percentage change of these stocks. Clearly leaders in the market. I said I would finish on my buy list, and I'd like to do that so you guys get an idea of the things that I'm looking at this week. They're not always as good as they were this week. Let me put it by industry, and maybe I'll comment on a couple. I don't know much about this company except I made some good week. It's a play, and I bought it. I don't remember why I bought it. Oh yeah, I bought it because of its earnings per share. As I said several times, I love earnings, the IPS, and I looked at a stock that's turnaround. It's a huge PE, but it's a $30 stock. A PE of 20 gets it there with $1.62 of earnings, and it's growing 84 times. So I was excited by its earnings per share growth, and I own it. I still think it's interesting. NSM and OCN, I own OCN already, looked interesting to me this week as well. These are companies that bought up a lot of the bad mortgages. I think they sold off with concern about the rates going higher. They serviced them. They may not need to originate new ones to be strong, and that's NSM. Look at the earnings per share growth there. Earnings per share growth on OCN, a similar pattern. I own this one, a Kahuna on Friday. DI crossover, awesome earnings per share growth, like that one as well. I've mentioned before, like American Axle, these are beat up, clobbered auto supply companies. They've done a lot of interesting to stay in business, including they've jettisoned some of their union obligations, some of their health insurance obligations. Look at the earnings per share growth on this guy here. And one that popped up today that I thought was interesting is Federal Mogul. And it's already had a big move. It's doubled from 5 to 10.8. Why am I interested in Federal Mogul? FDML. Does the word earnings matter to me? Absolutely. And I saw this. Turnaround play. I see big earnings coming into the stock. I don't need a 50 earnings per share multiple on $1 of earnings to make this exciting. 15 or 20 gives me a huge return. I think this one is priced to move. Travel Centers of America was another one I felt interesting. I love the run-up, go sideways. Can't ignore two Kahunas last couple of days of DI crossover. Let's take a look at its earnings. So I can't remember what I saw on this one. And these earnings are stellar as well as far as growing. If it grows 30 times this year to next, has a multiple of 9. It goes with a chart pattern that looks to me like it wants to go higher. We've talked a lot about a lot of these. This was picks last week with Alliance Fiber. Felt a little silly in the beginning Monday as it pulled back, but it ended up the week nicely. Why do I like it? Earnings per share. This is not a big stock. Trades 194,000. Its market cap is 265 million, so it's a small stock, but a nice pattern. SunPower, another solar stock like First Solar, beautiful pattern, pullback, running again, great earnings per share growth, and a lot of buys have been coming in to this stock as well. And I guess on that note, anything else? There's that Owen. I think I'll say good night. So let's take a look at futures, because that's really where it's at here, is will this market be driven higher? So it grew 7.5. That was, I think, the prediction. And the futures have come back a little bit, so probably means won't be a big influence on the day tomorrow. You all have a great night. Sorry for the technical difficulties in the beginning or in the middle. Hopefully the change of internet providers did the trick, and we'll talk to you all soon. Good night, everybody.